What's it, if it's free to create something, how much is it worth? How much can you sell it for? If it costs you nothing to make it, what's the value? And that's the point I'm trying to make with the Federal Reserve is they create all these dollars, but are they actually creating value, or are they just adding supply to an already oversupplied currency market that truly has an intrinsic value of zero? I think, and I didn't see that, so I can't really comment too much on it, but the way you described it, I think Mike Maloney is missing the point when he's talking about percentages and value. When all is said and done, in my opinion, what's going to happen is people are going to count their net worth in ounces, whether it be ounces of gold or ounces of silver or the equivalent. In other words, you might have a ton of real estate, you might have a ton of dollars, a ton of this, a ton of that, and it's only 73 ounces of gold, or what, pick a number, whatever number is. The point I'm trying to get at is people are going to count their net worth in ounces as opposed to in dollars or euros or yen or what have you.
So another way I look at that, Bill, is that maybe it's perception versus reality. People don't have as much wealth as they think they have, is what I'm hearing you say.
Correct.
Which is going to be part of the eye opener as we shift systems, to your point earlier. So thank you for making that distinction. As you know, Basel III took effect July 1st, particularly the reclassification of physical gold as, a tier one asset. You've talked about that before. It's expected to significantly impact the gold market. To me, because gold is basically on the same level as the U.S. Treasury securities now, it makes owning gold far superior because it's a physical, tangible, hard asset. What are your thoughts on that? And do you foresee a record gold buying continuity as well as silver in the future?
As I understand it, John, Basel III was supposed to go into effect July 1st. And because the American banks could not qualify, it's been postponed, I think, into the first half of 2027. Now, yes, gold is considered a tier one asset, but the Basel banking rules that were supposed to take effect worldwide, that's not happened. That was postponed. I understand it.
With the inevitability of Powell being dumped, I think, or ultimately to lower rates, maybe 1% or even less. And we talked about Judy Shelton. Do you think? I guess the question is, do you think when they replace him, do you think the rates will matter at that point, or is the Fed basically just going to be baked into the Treasury?
The Fed is already, you used the term baked into the Treasury. I think that happened, 4 or 5 years ago?
5 years ago, yeah.
So basically, the Fed and the Treasury are the same. They're not the same entity, but they're under the same warehouse. They're under the same roof.
Yeah.
And people need to understand, the Federal Reserve never was federal. So I guess now, technically, it is federal because it's under the umbrella of the Treasury. But the danger is that you've got a right pocket and a left pocket, and you can the right pocket, the Treasury needs to borrow, and the left pocket will automatically buy up any and all debt that's issued. So the real danger is that you put these two together, and it's a monetization fiasco. Not real capital. What the Federal Reserve creating dollars, that's not real capital. I mean, they're creating something from nothing. If it's free to create something, how much is it worth? How much can you sell it for? If it costs you nothing to make it, what's the value? And that's the point I'm trying to make with the Federal Reserve is they create all these dollars, but are they actually creating value, or are they just adding supply to an already oversupplied currency market that that truly has an intrinsic value of zero.
Mhm. Absolutely, because like you said, it didn't cost anything to make. I mean, banks make no products or services. It's all artificial debt based, as you know. They just, it's like no taxation without representation. Everything we were supposed to learn in school constitutionally goes against the precepts of our forefathers. Um, but I did want to ask you about this, Bill, as a secondary question. Wouldn't lower interest rates historically send precious metals soaring? And don't you find it unique that crude oil is going up during the summer when going down when traditionally prices go up in the summertime?
Yeah, see, you're looking at history that's getting further and further away from August 15th, 1971. That's when we truly left the gold standard. And yes, historically, high interest rates are a competitor to gold that pays no interest, and low interest rates supposedly are friendly to gold and silver because they don't pay any interest. And if your competition is a 1 or a 2% CD, it's not really competition. The problem that I see, you're looking back at history and saying, well, this happened and then thus this happened. The problem is we're at the final end times of this fiat experiment. You've got the issuer of the currency, the global world's reserve currency, the dollar, in a precarious financial position. So what I'm getting at is currently there's like no risk premium to owning treasuries. I mean, if a 10-year treasury, what, 4.25, 4.35, whatever it is, if there was a premium that was placed upon that because there's the danger of the fiscal danger that money's going to have to be printed just to pay interest alone. If there was a risk premium on it, rates would be significantly higher. But would gold be lower under that scenario? In other words, if it looks like the Treasury's running into a problem, there's a run of selling treasuries worldwide, and interest rates are going up, is that going to retard gold from going up? Will gold owners really be afraid that, oh my gosh, I'm going to lose out on, an additional 3%, 5%, whatever, in interest from dollars, whereas I own the gold because I think the issuer itself of dollars is going to go bankrupt?
Ladling calculation upon comedy, because you're talking about something tangible versus something that's theoretical. And you're right, the dollar's clearly losing its hegemony status across the world, which actually brings me into one of my last questions for you today that I don't think, Bill, people are talking about quite enough. And that is, there's a lot of talk about the trade deals, and you extenuated the timeline from July, I think tomorrow, to August 1st to give more countries, the ability to come on before he brings in tariffs, and he's listed a number of countries who are not coincidentally aligning themselves with BRICS. We've talked about this before. But I don't think this is, I think it's just a chess move for him to create reciprocal trade deals as he did with Argentina and Hyperinflation. So couldn't he conceivably be just using that as bait to make these trade deals to get at the assets, whereas he's still going to allow BRICS to pull away from the dollar hegemony and create their own thing, which they have already been doing since last year with the unit, so that it's sort of a win-win proposition?
Yeah, I'm sure that he's using it as leverage or bait or whatever you want to call it. The problem is there's now, I think, half the world is talking about joining the BRICS. This is not 1950 or 1960, where the United States was the biggest, baddest military, economic, financial power in the world. I mean, it's questionable whether we're the strongest militarily anymore. You look at the leverage in the system, financially, we're standing on a knife's edge. From a real economy standpoint, our economy has been gutted. I mean, look at manufacturing over the last 20, 30, 40 years.
Yep.
So we're no longer the biggest, baddest bully on the block.
Right.
If we were, then Trump's actions uh, would not appear to me to be bluffing, but it appears to me as one giant bluff. And the
Yeah.
problem is, there's too many countries, there's too much of the world that already wants to distance themselves from the U.S. and from the dollar. And they want to distance themselves from the dollar because, people, if you and I know there's a problem, the smartest people in all these other countries, they know there's a problem. And they've also seen the United States make deal after deal after deal for what, the last 30 plus years, and we don't adhere to them. I mean, we make a deal and we break the deal.
Yeah, it's a double-edged sword. And, I think you're right because, all these countries have plenty of reserves. You got Zimbabwe with 40% of the world's gold reserves all by themselves, and that's just one nation. So, yeah, but it's clear to me that the Operation Sandman is at least has 100 nations. And I think at the end of the day, it's going to be infinitely more than that as people lose confidence in the old Fed dollar. They're going to continue to pull away. I don't think that President Trump can't stop it or necessarily wants to because it's part of, as you said, gutting the old system, which is kind of inevitable at this point.
And he wants a weaker dollar. I mean, and obviously his actions with tariffs, he wants a weaker dollar. He wants a balanced trade deficit. And the easiest way to do that is a weaker dollar. You've got the president who wants a weaker dollar. If you knew nothing else at all, you'd want to be out of dollars and into gold or silver just with that little bit of information alone.
You're more in the financial advisor realm than I am, so that's why I ask you this. But I believe you said something to the effect of, if you had to make a recommendation to people in terms of precious metals, at least have $1,000 of junk silver per household per person. Is that still the baseline, or have you adjusted that?
Well, I've said if you can afford to have one bag of junk that's 1,000 fake, 715 ounces, if you can have one bag of junk for each person in your household, you should financially be able to get through whatever they throw at you.